Today, we are diving into a company that is posting some truly mind-blowing numbers in a sector that's about to become one of the most important on the planet. We're talking about a potential revolution in energy storage. And the charts? Well, the charts are telling us the market is just starting to pay attention.
Welcome to ValueVest Daily, where we analyze the best value and momentum investment opportunities. Okay, let's get right into it.
Okay, just look at that number. 3,500%. No, that is not a typo. That is the actual staggering year-over-year revenue growth that Eos Energy, ticker EOSE, just put up for their third quarter. Now, a number that massive just begs the question, what in the world is going on with this company?
So, to understand that crazy growth, we've got to pop the hood and look at the fundamentals. Let's break down what Eos Energy actually does and why it's suddenly so incredibly important.
Eos plays in a really specific and really critical field, long-duration energy storage. And it's pretty simple when you think about it, right? The sun isn't always shining, the wind isn't always blowing. So if you want a grid that runs on renewables, you've got to have a way to bottle up all that energy for hours, sometimes even days. And that is exactly the problem EOS is built to solve.
So how are they doing it better than anyone else? Well, this brings us to their competitive moat, their secret sauce, a completely unique and frankly game-changing zinc battery technology.
Let's just run through the advantages of their Znyth technology, because this is huge. First off, it's non-flammable. That alone is a massive safety upgrade from lithium-ion. It also lasts way longer, costs less over its lifetime, and, this is a big one, it's built using a U.S. supply chain. And get this, thanks to the Inflation Reduction Act, it can get up to a 50% cost reduction from tax credits. That is a massive advantage.
I love this analogy because it just makes perfect sense. If a lithium-ion battery is like a speedboat, great for quick bursts of speed, then EOS's zinc battery is the giant cargo ship. It's built for safety, reliability, and the heavy, long-haul work of powering whole grids or the new power-hungry AI data centers. So it's not really trying to kill Tesla. It's playing a totally different, and you could argue, much bigger game.
And all that cool tech, does it translate to sales? Oh yeah. You can see it right here. They've gone from about $17 million in revenue to a projection of $150 to $190 million. That's not just growth, my friends. That is an explosion. It's what happens when the right technology meets a market that is just desperate for it.
Okay, so the fundamental story is powerful, for sure. But what's the market actually doing with the stock? What are the charts telling us right now? Let's take a look. First thing you'll notice is the price is holding strong, well above its 50-day moving average. For all you chart watchers out there, you know that's a key sign of a healthy uptrend. That $10 level is acting like a solid floor, meaning every time it gets close, buyers are jumping in. That is super bullish. Next up is the RSI, the Relative Strength Index. Now, you might think after such a huge run-up that this stock is just totally overbought, right? But the RSI, which is kind of like a momentum gauge for the stock, is telling us a different story. At just under 60, it's in neutral territory. That means, incredibly, it still has plenty of room to run higher before it gets overextended.
But you know what? Here's my favorite indicator. Forget the charts for a second. Let's just follow the money, the smart money. Are the big Wall Street funds buying this thing? The answer is a huge yes.
Whoa! So institutions now own almost 55% of the entire company, and that's up from just 47% last quarter. That's critical. It tells us the big funds aren't just sitting on their shares, they are actively buying more.
And we're not talking about small shops here. We're talking about the giants of the industry. Vanguard just added almost 3 million shares. Morgan Stanley picked up nearly 2.8 million. When you see names like that placing big bets, that is an enormous vote of confidence in where this company's headed.
Okay, so let's put it all together. We have an explosive fundamental story, the technicals look really bullish, and the smart money is clearly piling in. So the big question is, where could this stock go from here? Well, there are some serious catalysts on the horizon that could act like rocket fuel. First, the absolutely insane energy demand from AI data centers is creating a brand new market for them. Second, they're in late-stage talks for a government loan of up to $500 million, which would be massive for scaling up. And finally, their new factory automation is coming online right now to start working through a huge 4-gigawatt backlog of orders. So what does all this mean for the stock price?
Well, the high-end analyst target over the next year is around $22. But if you look out 3 years, if they execute their plan and really capture this demand, a price target of $30 or even more is definitely in play. We're talking about more than a double from where it is today.
Now, it can't all be sunshine and rainbows, right? No investment is a sure thing, and it's absolutely critical that we look at the other side of the coin. A good analysis has to include the potential risks.
So what do you need to watch out for? First, execution risk. Can they build these factories and scale up fast enough? It's always a challenge. Second, there's a really high short interest, about 30%. That means a lot of people are betting against the stock, which can create a ton of volatility. They also barely missed revenue estimates last quarter, which can spook some investors. And finally, to fund all this growth, they might need to sell more shares, which can dilute existing shareholders.
And of course, I have to say this. This is not financial advice. We're providing this for educational purposes only. You have to do your own research and make the investment decisions that are right for you and your own personal situation.
If you got value out of this breakdown, please make sure you subscribe, hit that like button, and share ValueVest Daily. It helps us keep finding these daily opportunities for you before you put your money to work. And hey, one more thing before you go. Is there a stock that you're watching when you want us to do a deep dive on just like this? Let us know. Drop the ticker symbol in the comments below. We read all of them.